Hey everyone, welcome back to the Art of Adjusting podcast. Today I'm going to be flying solo. That happens sometimes. Life happens, work happens. We all have day jobs, so sometimes the schedule here gets a little juggled around. Today we're going to talk about the evaluation of damages. And damages are basically the amount of money that is paid to someone to settle a claim, either for property damage or bodily injury claims. And we're going to focus mostly on bodily injury claims today. Now, the evaluation of damages might seem a little straightforward, but when you dig into the details like everything else, it becomes very complicated very quickly. And we're going to talk about some of those complicated issues today. So what are damages in the context of an insurance claim? You have to remember that damages represent dollar amounts, but they don't always represent dollar amounts that can be tabulated. Sometimes they represent intangible things like pain and suffering, and we're going to talk about how we deal with those intangible items. We're also going to talk about how we actually collect the information needed to make a good decision on the damages. We can tabulate, actual numbers, but we also have to consider all of the intangible items and how those intangibles may change over time. We're going to talk about mainly the difference between evaluating very simple damage claims like property damage, where we actually have damage estimates or dollar figures to, tabulate the total amount, versus how we actually put together numbers that coincide with intangible things like pain and suffering and emotional damage and emotional harm and things like that. So I think these topics are going to be important both for new adjusters and for experienced adjusters, and also for supervisors and managers, because these concepts, when the way we're going to lay them out here, can be helpful when you're training younger staff members to show them the road and to show them, how these damage assessments can be very complicated. So thanks for joining. Sit back, and we're going to dive right into damage evaluations. So what exactly are damages? The concept of damages means that someone has experienced a loss. If you have a car accident, the value of that car has been reduced by a certain dollar amount, mainly in the cost of repair to it, but also in the cost of its diminished value, and that's a whole other topic. But basically, when we have a loss to property damage, it's easy to tabulate because we know that it started out at a certain value, and after the damage, it is now worth less because of the damage and the cost of the repairs that have to go into it to get it back to the condition it was in prior to the accident. The same kind of holds for injury claims, where we have to figure out what the cost is to get someone back into the condition that they were prior to the accident. Now, that's not always possible, and we're going to talk about permanency and things like that and how we compensate for that as well. But just in your head, remember, damages equals dollar signs. That's the best way to remember. And when we talk about liability claims, we are talking about getting someone back to the same condition they were in prior to the accident. Of course, that's potentially more applicable to first-party losses, where a person makes a claim under their own policy. Let's say they had a windstorm that blew their roof off. They make a claim for the replacement of the roof. The insurance company will pay for that cost. The damages in that case is the actual cost to replace the roof. The roof gets replaced, they have a new roof, and they're back to the way they were. They might actually be in better shape than they were if they had an old roof that was damaged by wind. And that's a whole depreciation discussion that's for another time. So in those first-party claims, the insurance company is paying damages to their own policyholder. In liability claims, what happens is the insurance company is paying a third party who had suffered an injury or property damage because the policyholder was negligent. And damages apply there as well. Their damages are the amounts owed by the policyholder to some other person because they injured them or caused property damage to them. Again, damages equals dollar signs. So in this case, how many dollars does the policyholder owe to someone else for an injury or property damage? In liability claims, evaluating those damages can be quite complex, even on the property damage side. One of the complicating issues on the property damage side is that replacement cost is not owed. That means that only depreciated value is owed, meaning that if you had a 10-year-old roof and let's say it was a 20-year warranty, and if it's 10 years old, it has depreciated by 50%. That's the actual cash value. In a liability claim, you only owe actual cash value. So if someone damaged someone else's roof, think of an example in your head. I can't off the top of mine, but if someone damaged someone else's roof, they would only owe them for the actual cash value of the roof, because they only owe to get them in the same position that they were prior to the loss. If they were to pay to replace the roof, now they have a brand new roof, and that roof is what we call a betterment. And betterments aren't really owed by a third party in a tort liability claim, so depreciation can be applied. That's probably a weak example, but it demonstrates at least that only actual cash value is owed. Take an automobile, for example. If your automobile gets totaled in an accident and the other party is going to pay for your damages, they're not going to pay to replace your car with a brand new car. They're going to pay what the actual cash value is, or the market value of your model year with your mileage and depreciation and all that applied. So maybe that's a better example. So our job as an adjuster isn't to automatically reduce the value of all the claims that are made against policyholders. What our job is to document the actual cost of all of the damages. And in property damage, that means we get all the estimates and all the repair bills. In bodily injury claims, that means we get all of the costs that the claimant has incurred. And then we also evaluate pain and suffering and some of the more intangible components of their claim. And our job is to do that fairly and try and reach an agreement where the insurance company and the claimant can agree on a final settlement so that a release can be obtained to protect the policyholder. A release will extinguish a claim from now till the end of the world. So it's very important that we obtain that release, because it means the claim is over and our insured's interests are protected. In property damage and injury claims, the damages can be very complex, especially when if you've on a property damage loss, for example, you may have a lot of components of a claim. If a homeowner's house is damaged, presumably the contents of that house will have been damaged as well. And they will have to have temporary housing while their house is being repaired. If they're to make a first-party claim under their own policy, they'll have coverage for those items. If they don't have insurance and they're making a claim against someone else for negligence that damaged their house, then it's up to the liability adjuster to dig in and evaluate all of those costs. And it can be very complex, and especially when you consider that damages also have to be mitigated, which is something else we'll talk about coming up here. In liability claims involving injuries, it can be even more complex, because not only are you dealing with medical bills, you may have liens from things like Medicare or Medicaid. You'll also have additional costs for physical therapy. You may have costs that are going to extend throughout the lifetime of this individual. If you're settling it when they're, say, age 45, you have to consider that the ramifications of their injury may continue on for the next 30 years or the rest of their life, and that needs to be calculated as well. So now we're going to talk about the difference between general and special damages. I'm going to define each of those so that you understand them, and then we'll talk a little bit about how complicated they can be. So both special damages and general damages are very important aspects of a claim evaluation, and both require different approaches. Let's first talk about special damages. Special damages are a little easier to deal with because they can be calculated based on hard numbers. They will involve invoices. They might involve a worksheet with hard numbers that coincide with certain pieces of data or documentation that can be used to substantiate the dollar amount of the claim. Examples of special damages include medical bills, lost wages, extra expenses for things like getting around, or if someone's injured and they have to hire somebody to mow their lawn or shovel snow out of their driveway or even get groceries. Those are all things that have a hard cost to them. And we can determine what that cost is up front, or we can document the costs as they happen and look at paid receipts or paid checks or things like that. Documentation that can support the amount of the special damages. Special damages are a very concrete and quantifiable component of a claim. And really, they're easier to document than general damages, and I'll explain why in a moment. But that is usually the first part of evaluating your claim, is gathering all the special damages so that you have a sense of what the real scope of this claim might involve. If you've got medical bills of $500, you instantly know that if that's the total amount of the medical bills, this is probably not a serious injury. If you have medical bills that are $500,000, well, then you know right away this is probably a serious injury, and that the evaluation of the pain and suffering portion of each of those two examples is going to be far different. So we're going to talk about that next. General damages. General damages are harder to quantify because there's no chart, there's no book that we can refer to and say, okay, for a broken wrist, that is X amount of dollars in pain and suffering. It doesn't work that way. The general damages, the categories of general damages include pain and suffering, mental and physical distress, which is kind of the same thing as pain and suffering, and loss of enjoyment of life. And there are lots of different categories of that as well. One being maybe loss of consortium, where a person is unable to have normal relations with a married partner or something like that. So those things have value. How much value they have is another question. And again, there's no book. That's why it's harder to quantify and measure general damages than special damages. However, as I said, a lot of times special damages can kind of give us a clue as to where on the spectrum the general damages might fall. I'll give you a quick example of how complex the evaluation of general damages could be, potentially. Let's say you have a young professional. We'll call this a man, and this young man of 36 years old, let's say, is employed as, pick your profession. Let's call him a dentist. So we have a 36-year-old dentist. I don't know how much dentists make, but I'm sure it's a lot. If that individual gets involved in an accident that's caused by someone else and gets injured to the extent that he loses his ability to work in his field as a dentist any longer, then the lost wage component of that could be quite significant. If he's 36 years old and wants to retire at 65, he's got 29 years ahead of him to make an income. If he's unable to do his job as a dentist anymore, that's a significant lost income. Now, that's just the special damages. That's a quantifiable thing. We can do math, and we also have to do math on how that income may increase year over year because of inflation or him getting better at his job. There's a lot of factors to consider here just on the special damages side. On the general damages side, let's say that he is married with 2 kids. And if his injury involves something that has him wheelchair bound for the rest of his life, for example, well, he's not going to be able to play ball with his boys. He's not going to be able to have, the normal activities that he would with his wife They wouldn't be able to go on trips together like they normally would. If he's an athletic person, that part of his life would be changed forever. You can see how general damages will include all of those intangibles that should be accounted for when you're considering the value of the claim on the general damages side. Complex, yes. Interesting, yes. And sometimes it takes a team of people to really dig into the weeds and figure out what a claim like that might be valued at. And ultimately, the value is going to come either from an agreement between the claimant and the policy, well, not the policyholder, but the insurance company. Without insurance, the agreement would come between the injured person and the person who caused the injury. You have to remember, insurance companies step into the shoes of the person that caused the injury. So forgive my confusion here, but when we talk about it, the claim is actually always being made against the policyholder. Yes, the insurance company ultimately crafts the agreement and negotiates the settlement, but the point is that the resolution of that claim will ultimately come from an agreement that can be reached between the parties. It's not something that we can look to objectively in a book somewhere and determine the value of that claim. So in that example alone, you can see it's very challenging. And those challenges in determining the value of a claim like that need to be addressed by people who have some experience in that. And the industry, the claims industry, has a lot of people who have been around for a long time and seen a lot of injury cases settled. The learning curve for things like this can be many, many years. And a new adjuster needs to be hyper vigilant in their workspace to observe some of the claims that are going on around them and to participate in roundtables, listen in on conversations, ask questions about why a claim may have settled the way it did, and eventually your knowledge base will build and you'll be able to be a little more comfortable in at least attempting to evaluate some of these complex claims. When it comes to injury claims, the complexity is often amplified by the severity of the injury and the length of the treatment and permanency. So there's a lot of factors that can make these things more complicated, but those three things are some of the more significant reasons why claims are evaluated so much higher than other types of claims. So now we're going to talk a little bit more about all the challenges that we face as adjusters when we're trying to evaluate these complicated claims. When you compare bodily injury claims to property damage claims, it's very easy to see very quickly that a property damage claim is much easier to evaluate. You've got very hard numbers. You've got, in many cases, you can go to an outlet or a store and you can actually see what an item costs, and then you can use that in your property damage evaluation. If someone were to lose a limb or a hand, there's no hand store that you can go to and look at what it costs for a new hand. You can look at what it costs for a prosthetic and the average cost for that procedure and that device, but it doesn't replace the hand. And that's where things get really complicated when it comes to injury claims. Injuries involve both an immediate effect on the injured person and a long-term effect. If I were to break my ankle, the immediate effect is immediate pain. My day will be ruined. I will have to cancel my appointments. I'll have to find a way to get to the hospital, most likely an ambulance. And then I'll have to spend a lot of time in that hospital. And for broken ankles, that can be sometimes days. And then that might also result in a surgery, meaning more downtime, more pain, more misery, more depending on others to get things done that I can't do. My job will be affected. The things that I normally do at my job, I wouldn't be able to do, which means I'd have to hire somebody else to do that. Around the house, I'd have problems getting groceries or mowing the lawn or taking care of laundry, all of the things that happen in a household. If you're responsible for those, you would have to find somebody else to do those. So the complex part of the claim happens in the early phases, but then the long-term effects can be fairly profound. Back to the ankle injury, if you have a very physical job, you may not be able to work at that job for several months, maybe 6 months, sometimes a year, depending on how severe the ankle break is and what the surgery involves. And if that's the case, now you have this long-term income situation. The other complicating things with injuries is that over a long period of time, there are residual effects from the injury. If you are athletic, you may not be able to participate in the sport that you love for the rest of your life. And even if you can, you may not be able to compete as well as you did before. So there's a lot of long-term effects that you need to consider when you're talking about general damages. It's not just pain and suffering during, the period where the accident happened. It's also pain and suffering over the course of someone's lifetime. Now let's actually talk about pain and suffering. Pain, that means it hurts. Suffering, that means that I'm overall very unhappy and not in a good place. I'm probably miserable and grouchy, and maybe I have a little bit of an attitude because of the pain I'm experiencing. So that pain and suffering not only affects you, but probably the people around you, right? So how do you quantify that? That is the rub. That is the very difficult question. What does it cost for the pain and suffering associated with a particular injury? Let's go back to the ankle fracture. There's a pain scale they use in hospitals. How much pain do you have on a 1 to 10 scale, with 10 being the worst? I'll see in medical reports, people report 8, 9, or even 10 level pain. That's pretty significant. Well, if you're in that level of pain for, let's say, 24 hours, that's kind of a scary prospect. But if that's the case, if you're at a pain level of 8, 9, or 10 over 24 hours, what's that worth to a person? I don't know. What's it worth if that pain is then reduced the next day to only a 6 or a 7, and that lasts for a week? And then it's reduced to a 4 for the next 12 months, with periods where it spikes up to 8. Complicated. There's no real way to draw numbers on a graph that would adequately represent the value of the claim at any given time. So what we have to do is find a balance between the special damages and the general damages to get to a number that ultimately will settle. And what we have to also do is have conversations with the injured party or their attorney and really get a sense of where their head is in terms of the value of that pain and suffering. And then we also have to look at the medical records. If we're talking to the claimant and they say that the pain was the worst pain that they ever had, but the medical records all say that they told them that the pain level was a 4 to 5, well, then you need to have a conversation with them and explain to them that I know you're saying that you had pain level of 9 or a 10. The records say 4 to 5. So can we kind of, come to an agreement here on where your pain level really might have been and what that means in terms of dollar amounts? Ultimately, these pain and suffering numbers are very subjective. They come from each person's perspective on the matter. So the claimant is going to have their perspective on the value. The adjuster may have their perspective on the injuries. And the settlement has to come somewhere in between there. Sometimes it might be a little closer to the claimant's assessment, sometimes a little closer to the adjuster's assessment, and sometimes right down the middle. And we never really know where it's going to wind up. We try and get things as close as possible to traditional settlements across the board, but we have outliers too. But I can tell you, in all those outliers, there are different circumstances. Every claim I have is different. Every claim involves someone of a different age, a different background, a different pain tolerance, different circumstances as to how it happened. And we're not talking about liability assessments here, but liability is also a factor in the ultimate settlement. So it's a complex game, and you have to know how all these moving parts work together in order to navigate a settlement involving a bodily injury claim. So next we're going to talk about factors that influence the amount of damages on any given claim. As I've already said, every claim is unique. There are certain factors in one claim that will drive the cost up or down, and certain factors in another claim that are completely different that will also have an effect either up or down. A good adjuster will recognize the factors that have an up or down influence on the value of a claim. So here we're going to talk about 5 different items that heavily influence the value of an injury claim. The first is the severity of the injury. So if someone sprains their ankle versus someone who breaks their ankle, a broken ankle is more severe than a sprained ankle. That's a very easy, simple illustration that shows that the more severe the injury is, the higher dollar value that claim will have. Now, why is that? Is it because the injury hurts more? Probably. That's a factor. But it's also that the recovery time is greater. A sprained ankle can be recovered in 3 to 4 weeks maybe, with maybe a little residual for a while. A fractured ankle can take several months to heal, and if it requires surgery, then not only do you have to heal the fractures, but you also have to heal from the surgery itself. And there's going to be significant physical therapy as well. And then there may be significant wage loss associated with that. So there's a lot of factors that can go into a more complicated claim that drives the value up. Another factor that can influence the value of a claim is the age and the overall health condition of the claimant. That means that if someone is younger, they may be able to heal faster, and therefore their claim could be worth less than someone who is older and who takes longer to heal. That healing process is just one factor, though, when it comes to age and health-related things. If there's a young person who's very healthy, very athletic, and has a very high salary job, their claim could be worth more than the older person's claim because their lost wage component is going to be much higher. They may have a promising career as a professional athlete. That could have an influence on the value of the case as well. So these are very fluid kind of circumstances that can have an effect on the value of the claim. So it's important to not get pigeonholed and just say, well, a younger person's injury is less more than an older person's injury because they heal faster. Well, that might be, but there are also factors in a younger person that could drive up the costs. So keep that in mind. The third factor is jurisdiction and regional differences. And it shouldn't be this way, but it is. We find that verdicts within the major cities throughout, like New York State, are generally higher than in rural communities. Courts that are in rural counties tend to be a little more forgiving in terms of jury verdicts, where if you're in a major metropolitan area, especially in New York City, the values are always perceived as much higher there than in the outlying counties. So bear that in mind when you're evaluating injury claims within city regions or well out into the rural areas. The fourth thing that can drive up the cost of an injury claim is the circumstances of the incident. If you have 2 fairly identical injuries, let's say, I keep going to the broken ankle. We see a lot of broken ankles here. But if we have a broken ankle that happened because someone slipped on snow and ice, that could be considered fairly benign in terms of the cause of an injury as compared to someone who falls off a roof. Someone who falls 3 stories off a roof may have a very traumatic incident that would have caused potentially a similar injury. Now, I'm not going to get into the details. An impact injury from a fall from a roof is never going to be the same as a injury from a slip and fall incident, but they both might involve surgeries. They both might involve a person of the same age. They both might involve the same amount of recovery. The point being is that some injuries are far more traumatic than others. I would think that falling off a roof would be mentally far more traumatic than slipping on snow and ice. But that's me. If you're afraid of heights, then you might think the same thing too. I'm not really afraid of heights, but I don't want to fall off a roof. When it comes to the circumstances of the incident, it's not just how the incident happened. So I gave you 2 examples, a slip and fall versus a fall off the roof. They could also involve a situation where one person was egregiously and recklessly responsible for the injury. In a case like that, that injury might be perceived as a higher value because of the complete irresponsibility of the person who caused it. Now, that you could argue that that is more of a liability argument than a damages argument, but liability, both on a micro and macro scale, is going to have a fair impact on the dollar amount of your claim evaluation. And the final item here that's going to drive up the value of the claim is if the claimant is a very likable person. If they're not likable, it could drive the value of the claim down. But if this is a person who is upstanding in their community, let's go back to our dentist example. Let's say he's, very well known in the community. He is, he volunteers a lot. He is a sports, star, and everybody knows him and loves him. That's going to be perceived as probably a higher value claim than if he wasn't all of those things. So just take that into consideration as well. And actually, now that I think about it, a better example might be someone who's a movie star. If you got 2 identical circumstances and 2 identical injuries, and you've got, the average Joe who works as an accountant downtown versus someone, like a movie star. Name your favorite movie star, and they have the same injury. Chances are the value of the injury to the movie star would probably be perceived as higher just because of their fame level, I guess. So those are 5 examples. You can write them down if you want, but the overall thread here is to ensure that you're looking at all of the factors that could potentially have an influence on the value of that claim, either up or down. Most of these are factors that would push the value of the claim upward. But the opposite is the case too. And some of these are actually going to push the value of the claim downward. If the if the claimant contributed to their own injuries, or if the claimant was lax in their medical treatment, meaning that they failed to mitigate their recovery and mitigate the injury, then the value of the claim could be seen as lower. So you have to kind of think of these in a global sense and try and get your brain around all the factors that could be involved in the ultimate value. So this bears talking about. It is second nature to most people in claims. But if you're new to claims, or if you're a claimant, trying to understand how all these components work together is important. There's a theory called the single recovery principle, which simply means that a claimant can really only recover once for the injuries they sustained. I'll explain this a little better, I think. If you have a health insurance policy, every time you go for treatment, the bill will be submitted to them. They'll reimburse on a bill-by-bill basis. In liability claim situations, that's not how it works. Instead, what will happen is all of the damages at some point will be evaluated. Liability claim settlements generally shouldn't be settled or completely evaluated until the injury treatment is complete, and or they've reached maximum medical improvement, or MMI. Once they reach that stage, then you can sit back and take a look at all the special damages and then evaluate the general damages on top of that. But to do that as you go is nearly impossible. So the financial evaluation of an injury really can't occur until the treatment is done and we know all of the out-of-pocket expenses, including medical bills, lost wages, extra expenses, or anything else that came along the way. Then we can put all that together, consider the potential value of the general damages, and then a settlement offer might be made, or a settlement demand might be made, and it is then the job of the insurance company and the claimant or their attorney to come to some agreement. And if they can't, then that ultimately may be settled in litigation. So why is the single recovery concept important to a claimant? Well, it's important to a claimant because if they settle too early, they may miss out on claiming damages that they will suffer in the future. If you take my dentist example, if that person sustained a significant injury on January 1st and they wanted to settle by February 1st, they may not be considering the long-term effects of the injury that they have suffered. They could guess at it, but they might be wrong. They might guess that they will be disabled for 30 years. It may not be the case that they're disabled 30 years. They've only been injured for a month at this point. After 6 months, they might get better really quick. And the prospect of recovering fully in 2 years rather than 30 years might be a potential. My point is that it's beneficial for the claimant to consider the single recovery principle and wait until they are sure that they have understood all of their own special and general damages before they sign a release. Because once they sign a release, the claim is done. They can't come back for more. So for an adjuster, what this means is that it is our job to explain that to a claimant. It's not our job to rush a claimant into a settlement. I would never consider talking about settlement when I know someone is undergoing extensive continual treatment. As I said, if they have been treating for a year and it looks like they're probably going to have a certain amount of treatment that they'll have to undergo, for several more years, we can have a conversation about guessing where that extra treatment is going to fall. But we have to be open and honest about it. It is our job to make sure that we're doing things fairly and in good faith. The predictions on someone's recovery probably are not something that we can make as adjusters, but we have to have the resources available to find people who can help us do that. This might be medical experts. It might be an economist who can tell us about wage loss over a long period of time. The point is that this industry is supported by expert witnesses in all categories, including medical and financial and other areas as well. And a good adjuster knows when to utilize those resources in order to get the number right. Someone may claim that their total claim is worth $1 million, but it's our job to verify that. And to do that, we may need to get those experts in who can tell us whether or not that prediction about long-term treatment is correct or not. The single recovery principle not only benefits the claimant, but it also benefits the policyholder. That benefit comes primarily in the form of a signed release. As I said, once the release is signed, the claim is extinguished forever. That's why it's important to wrap all these damages up with a big bow, find out what the number is, hammer out an agreement, put it on paper, sign a release, get the check issued, and the claim is what I call donezo. So when we're talking about damages, this single recovery principle is really the cornerstone of a third-party liability claim assessment and settlement. Now we're going to talk a little more about the claimant's responsibility when they are injured. So you're an injured person and you want to know what to do next. And an adjuster says, well, you have responsibilities here. How do I have responsibilities? I'm the one who got hurt. Well, you have two main responsibilities. One is you have to be able to prove your damages. So if you're going to say that I want, X amount of dollars, there has to be some proof behind that. It can't just be because, well, I'm injured. Doesn't that count? Well, it does count, but it doesn't maybe count to the value that you think it is. So the claimant has a job to be able to help us get the information we need to evaluate the claim properly. That means we need to see all the medical bills. We need to know what all the extra expenses are. We need to know what the lost wages are. We can't guess at that. We will need the claimant to provide that information to us. We will also need copies of medical records because we want to see what the doctors have to say about the treatment and the injury and the severity of the injury and all that. We can't just take the claimant's word for it. And it's not that we don't trust them. I mean, sometimes it is maybe that we don't trust them, but it's also that they're not experts. They know that they're injured, but they don't know how that treatment is going to affect them. They don't know what the prognosis might be for future. The doctor may tell them, and they may have a sense of it, but we really need the doctor's version of events so that we can see really what happened. And medical records also serve to kind of tell us how an incident may have happened. And my theory on that is that emergency room records and EMT records from an ambulance are usually the most informative medical records that we have when it comes to the cause of the incident. All the other records are important too to tell us about the type of injury and the severity and the length of recovery. But those emergency room records and ambulance records are important because at the time someone is hurt, chances are they are going to be more honest than any other time during the claim process. They are not thinking about maximizing the dollar amount of their claim when they're sitting on a sidewalk with a broken ankle. They are the only thing they want is help. And they're going to answer any questions that are asked of them as honestly as they can because they want help now. They're not thinking about anything else. They want to get out of this situation where they're in pain. They want to get to a doctor to get fixed up, and they want to get back on with their lives. So what we find is a lot of times the statements made to EMTs and emergency room professionals by injured claimants sometimes are a little different than the stories we get 6 weeks later, a month, 6 weeks later, or a year later. And after they have had time to think a little more about what happened and maybe fabricate some things in their head, not calling them liars here, but maybe embellishing a little bit. Sometimes the stories between those records and what we're told later are a little different. So it benefits us to get those records to correctly and honestly evaluate what happened. Back to the burden that the claimants have. Not only do they have to prove their damages, but they also have a duty to mitigate their damages. Now, what that means is if you are injured, you could make matters better for yourself or worse for yourself. And you have a duty to make to make things better for yourself. And if you fail to do that, then you can't be compensated for the worsening of your injury because you failed to mitigate things. Meaning that if you are given a prescription for medication or physical therapy or exercises at home or to stay away from cigarettes, and you fail to do that, and because you failed to do that, your injury gets worse, then you failed to mitigate your damages, and you won't be owed for the additional stuff that happened because you were lazy or lackadaisical in your medical, prescriptions or whatever. You're only going to be compensated for what, would normally happen if you had obeyed the doctor and fixed yourself in a normal time period. So if you had an injury that would take normally 6 months to heal, but you behaved badly, you didn't follow doctor's orders, you didn't wear your boot, you didn't stay off your foot, you didn't quit smoking, all those things, if you failed to do those things and your injury now took a year and a half to heal instead of 6 months, well, that's kind of on you. And we can say as adjusters or defendants that you failed to mitigate your damages. So now let's do a little bit of a deeper dive into how claimants can actually fail to mitigate their damages. And these can be then used to defend against high value claims. So I already mentioned the ignoring of medical advice. If you have very specific instructions to stay off a broken ankle for a certain period of time, if you have very specific instructions to stop smoking because fractures tend to take longer to heal in a heavy smoker than for a non-smoker. The nicotine does something, I don't know what it is, but it does prolong the period of treatment. If you fail to go to physical therapy appointments, or if you fail to take certain medications that you should, these are all things that could demonstrate a failure to mitigate your damages as an injured person. Another example of failure to mitigate damages is when you incur outrageous and unnecessary expenses. So let's talk about someone who maybe needs transportation because they can't drive due to their injury. They could Uber, or they could hire a medical service, or they could use a relative. These are all reasonable options. But if instead they hire a custom limousine company to pick them up and drive them wherever they want to go every day, that could be seen as excessive. And especially if this is not their normal lifestyle. If a billionaire has that scenario, that might be different because maybe they have a limousine pick them up every day anyway. So, but that's different than the average Joe who drives a Toyota Tercel. Do they make Tercels anymore? And if that if he's driving to work every day in a normal sedan, and then he gets hurt and he figures, well, the insurance company's going to pay for it, I'll just get a limousine. You're not really mitigating your damages there. In fact, what you're doing is trying to inflate them unfairly. And so you have to be fair as a claimant too. It's just another duty you have. There are other costs too that the claimant has to manage and make sure that they're not excessive. If you have an orthopedic doctor in the town that you live in, but you decide to go to an orthopedic doctor on the other side of the country because you have a relative out there that said that they were good, well, that's not exactly the most cost-effective way to handle your treatment. So even though you may opt to do that, it doesn't necessarily mean that the plane trips across the country for your treatments are going to be made as a legitimate part of your claim. Now, there are some cases, and I don't see this very often, but I have seen it, where someone's religious beliefs will prevent them from getting the treatment they need. And if that's the case, if your religious beliefs are preventing you from healing properly, if your religious beliefs are preventing you from getting the treatment you need to heal properly and recover quickly, then you're failing to mitigate your damages. There's nothing saying that you are not allowed to follow your religious beliefs. That's not what we're saying. What we're saying is that because of that, you have an option here, and you're not exercising that option because of your beliefs. Generally, that's not going to be viewed as mitigating your damages. So even though, look, I want to respect everyone's religious beliefs, but if those religious beliefs are making the claim more expensive, we might have a problem with that. This duty to mitigate your damages speaks to fairness. On the adjuster side and the insurance company side, we can't do unreasonable things that are going to deflate the value of a claim. The claimant also is precluded from doing things that will artificially inflate the value of the claim. Everybody's got to play nice here. And that's really at the heart of mitigating damages. So now let's talk about permanent injuries and how they affect damage evaluations. Some people argue that all injuries are permanent. Well, that might be. When I was a kid, I got a cut on my hand. It's still there. I still have a scar. So that's a permanent injury, right? However, I deal with cases that involve serious spine injuries and people who are confined to a wheelchair for the rest of their lives. That's a pretty permanent injury too. Far different characteristics of those two injuries, aren't they? And far more profound and far more costly. And so we have to consider that as claims adjusters in our damage evaluations. So what is a permanent injury? Well, it's a physical or mental impairment. It's a physical or mental impairment that lasts for the person's life. Will this scar on my hand last for the rest of my life? Probably. And by the way, it wasn't a claim. It was my own stupidity. But the point is that significant impairments to someone's body or mental capacity are really what we're talking here in terms of claim value. We're talking about things like a loss of a limb, chronic pain or neurological issues that never go away, or visible scarring, the scar. But what we're talking about in terms of having significant claim value are the types of disfigurement that are going to last a person's life and may be very, very significant. So, these types of injuries that are very severe like this, they don't just have an impact on the special damages. They don't just have high medical bills associated with them. These are things that could change a person's entire life, not just their ability to work, but also their self-confidence and their mental health and their, just overall view of life. Depression can set in for these people, and all these things are factors that you have to consider when you're evaluating serious physical injuries that are considered permanent in nature. And now that I've mentioned it, let's talk a little bit about the effect of permanent injuries on someone's ability to produce an income. I've already mentioned the dentist. If that guy is unable to work as a dentist any longer, that's a significant lifelong reduction in income, and that needs to be considered as part of the claim. When we consider permanent injuries to a person, and we look at the special damages, most importantly the lost wages, but it can also involve long-term medical care, we have to look at a life expectancy table first. And we have to say, okay, this individual's 36 years old. And I don't know what the average age is of a male these days, but let's say the average age is 80 years old. And if I'm way wrong, somebody please hop in and correct me. But let's, for argument's sake, say that the table suggests that person is going to live to 80 years old. He's 36 years old now. Hang on, I got to go do math. 44 years. So during those 44 years, we have to understand how inflation is going to affect those wages over time, how inflation is going to affect those medical bills over time, how those medical bills may change as that person ages and needs different kinds of treatment. So it's very, very complicated when you're talking about permanent injuries that require treatment over a long period of time. As I said, there are other permanent injuries that may not ever require any additional treatment. Scarring is one. A young lady gets involved in a car accident and has a terrible scar on her face. That scar is probably never going to go away. Plastic surgery can help, but the reality is that scar is probably going to be there. Will she ever need treatment for that again? Probably not. After a year, that injury could be completely resolved. It doesn't affect her ability to do her job unless she's a supermodel. It doesn't affect pretty much anything in her life except maybe her self-confidence. But you need to account for that in your claim assessment. Some scars are in areas where people aren't really self-conscious about them, bottom of their foot, for example. But other places are more important, and we're all human beings, and we can all, kind of consider how that kind of permanent injury could affect somebody. So you have permanent injuries that involve long-term lost wages and medical expenses, and other permanent injuries that really don't involve those kind of hard special damage numbers, and instead have more of a kind of intangible effect on someone's life. And we need to be able to account for those as adjusters. So now we're going to look a little harder at what special damages actually are. I've been using them as examples throughout here, but let's talk about the tangible, quantifiable things that we consider as special damages here. Let's start with out-of-pocket expenses. Up front, that's going to be medical bills. If you have health insurance, you're probably going to have co-pays or deductibles. We can account for those and figure out what those are. Very easy to tabulate once they are incurred. But again, the single recovery principle says that we need to get all that stuff together before we can actually make a settlement. Prescription costs. Every time you go to the pharmacy to fulfill a prescription, there's a cost associated with that and a receipt. I always instruct my claimants to start a folder or an envelope where they just put those receipts in there, and they can get those to us either as they're incurred or at the end of the claim, and we can use that in the evaluation of our special damages. Medical equipment, if they have crutches or boots or wheelchair, all those things are considered special damages as well. So now let's talk about lost wages. I've mentioned it quite a bit so far, but basically what this is I'll tell you how it works when we actually have a claim. Mr. Claimant, I understand that you will be out of work for a few weeks. To evaluate that part of your claim, because we consider those special damages, we will need to know what your normal income is for a week so that we can multiply that by 3 for those 3 weeks of lost income. And so we'll need proof of how much you make. So a lot of times this will involve a wage authorization, meaning that we can go to the claimant's employer and we can say, hey, we're working on a claim with this person. He has authorized us to ask you to provide us with wage information. And then they'll usually send us a letter or something that tells us how much they make per week. And that way we can, verify what the lost wages are and then account for them in our total calculations for the value of the claim. Now, as I said, in permanency cases, it may be that person can never work again. So we're multiplying those wages by a very long time span, and we're also making adjustments along the way for inflation or pay increases or skill-related increases that they could expect over time given their intelligence level or whatever. Those can be very, very complicated. In other cases, they may be able to work after the injury, but not at the same level as they did before. Take a construction worker who suffers a back injury and they can never work construction again. And let's say they made $80,000 a year as a carpenter. Now they have to go to a desk job. And because they don't have training in accounting or whatever else it takes to run a desk job, they have to come in at a lower level, meaning they're making maybe half the wages they were prior to the injury. So we have to account for that difference in our assessment of special damages. No matter what type of special damages you're talking about, the most important thing you can do as an adjuster is make sure you're documenting all of the special damages. So it's your job to inform the claimant what special damages are and why they are important to the claim. And I'll explain why they're important in a minute. But it's up to you as the adjuster to explain to the claimant that it's their duty to get that stuff to you, And if they think of anything else that has had a financial impact because of this, you need to instruct them to get documentation of those costs or extra expenses to you. As far as extra expenses, one thing that I have mentioned before, and I'll mention it here again, is, if someone has to hire somebody to get groceries for them or mow the lawn or things like that. And again, as an adjuster, our job is to instruct them of these things. Now, there are two significant reasons why it's so important to get the special damages documented and documented correctly and thoroughly. One is to make sure, in order to make sure you're paying the claim fairly, you're accounting for the damages. You don't want to ignore something. You certainly don't want to talk a claimant out of making a claim for part of a legitimate part of their claim. Rather, what you want to do is get all that stuff and use it in your evaluation. So it's important to pay the claim fairly, but it is also important because you use those special damages as kind of the starting point in evaluating general damages. As I said before, if someone had a medical bill of $500 versus someone who had medical bills of $500,000, you know right at the outset that the general damages for those two injuries are going to be far different. So that's just an illustration of why it's important to kind of focus on special damages first and then use that as a springboard so that you can dive into your general damage evaluation after that. So now we are into the nitty-gritty. Now we are going to talk about how to actually calculate the value of pain and suffering. So general damages are far more complicated to evaluate than special damages. As I've demonstrated, special damages are really just collecting receipts, tabulating things. General damages are not so much. Pain and suffering doesn't come with a price tag. I wish it did. It would make my job a lot easier, but it doesn't. Pain and suffering is physical and emotional stress that someone goes through. And the interesting thing about it is with the special damages or with property damages, something has been lost. Something, either money or a building or something, is no longer usable. You have some tangible thing that is no longer there. It's gone. Pain and suffering does not have that component. It does not have something that's there that can be replaced. What it has instead is this concept that someone has gone through something that is causing them misery in some way, and that we want to compensate them for that misery. So how do you do that accurately? I don't know. I think if you talk to anybody in this business who says they know exactly how to evaluate pain and suffering, you're probably talking to a psycho. The things that you can do as an adjuster to get as close as you can to an accurate assessment is to, as I've said, make sure you're considering all of the factors that go into the impact the injury has had on someone's life. That does two things. One, it makes sure that you're not missing anything. If you're just thinking about the pain and suffering they sustained the week of the incident, you're definitely missing the boat, because chances are there are other impacts along the way that have also had an impact on their life. So the first purpose it solves is, when being thorough, is to ensure that you're being accurate. The second important thing that this does is that it demonstrates to the claimant that you have a global understanding of how this injury has impacted their life. And if you can do that, the chances of you being able to settle the matter in a non-adversarial manner are far greater, because you're showing the empathy required to recognize the impact that this injury may have had on somebody in a kind of a global sense. And in fact, if because of your experience level, you can demonstrate that you know the impact of this injury better than the claimant themselves, you're going to go a long way to demonstrating that you understand what has happened to them. And that doesn't mean necessarily that you're going to be able to settle this claim for less than you normally would. What it means is that you are more likely to be able to settle this claim without a legal dispute and without it going to litigation, which is ultimately what we want to do. We don't want to just pay claims that are, we don't want to overpay claims just to avoid litigation. That's not the goal here. But the goal is also not to go to litigation if we don't need to. So as the adjuster, it's your job to kind of do what you can to avoid that. Sometimes you can't. Sometimes there's just unreasonable people and you just can't have a meeting of the minds. But when you can, it's your job to do that as best you can. One of the problems that's always kind of proposed when talking about the evaluation of general damages is that it is so subjective that you'll never be able to come to an agreement, that two people will always pick a different number when it comes to the evaluation of a claim. And that's true. Even two adjusters evaluating the same claim may have a vastly different idea of what the claim is valued. I have an example. This one's a good one. We had a claim many years ago that involved a young man, and he had suffered an injury. I won't go into details as to how this happened, but it was an accident, and it was caused by the negligence of somebody, our policyholder. And as a result of that, he had to have some bodily organ removed that had to do with sexual reproduction. Now, this organ was important to reproduction, but he had two of them. So I had to evaluate that claim. And we had a defense attorney who was female. And we discussed the potential value of that claim and, the overall impact of the removal of that one organ and how that might impact this young man's life. And it might be no surprise, my evaluation of that injury was far higher than hers. In fact, she was taken aback by the number that I threw out, thinking I was so far out of the realm of reality that, and that really surprised me. And it made me realize that, the perspectives of the individual adjuster are always going to have an impact on their view of the injury. If you're a claims adjuster who suffered a really bad accident and an injury, you're probably going to have a very different perspective than someone who never had that experience when you're evaluating injury claims. So it's important to be objective and consider all points of view. And roundtabling is probably the best way to really get as accurate as you can on the value of those claims. With the claim example that I'm bringing up to you here, it ultimately settled for more than she thought it was worth, but a lot less than I thought it was worth. So that just goes to show you that, different people will have different perspectives on the value of these things. So we've talked a lot about permanent injuries, and we're going to talk about it a little more here. And we're going to talk in more detail about life expectancy and how it impacts permanent injury claims. As I've said, permanent injuries are those that are going to be with that person for the rest of their life. It's going to often change their whole lifestyle. It could change the way they make an income. It could change their outlook on life. It could change their confidence level in themselves. These types of injuries, they can involve a loss of a limb, loss of a bodily function, eyes, ears. It's the senses. They could lose their senses. They could have severe spinal cord injuries where they're permanently paralyzed, sometimes partially, sometimes completely. So quadriplegic versus a paraplegic. When these happen, they can no longer function the way they used to. A lot of times there's cognitive impairments. Traumatic brain injuries can cause mental issues. They may not be able to think the way they used to, may not be able to do their job anymore, may not be able to relate to people, like people in their family or friends anymore, because of cognitive issues. And when we're evaluating those, we have to consider the longevity of that injury, where they are in their life when it happened, and how much longer are they going to have to live with this issue. So from that standpoint, it's often the case when someone is very young and suffers one of these permanent type injuries, the value can be much higher than someone who is maybe older, because of the longevity involved and the number of years where that person is going to have to suffer with that. And the reality is, we don't know how long a person is going to live. And it may be that the injury itself may have a negative impact on their life expectancy. Someone who is a quadriplegic will likely have a shorter lifespan than they would if they hadn't had that injury. Predicting that is the job of an economist, and they will look at those tables, the life expectancy tables, and come up with an evaluation. And reasonable experts may look at the same chart and agree to disagree. But at the end of the day, there has to be some agreement on what that number is and how the impact will be amplified over that time period. This life longevity issue also plays into lost wages, as I've said. If they're going to be out of work for 44 years, multiply their salary by that, make an adjustment for inflation and raises and things throughout the year, and that can be a very significant number. And you also have to consider the medical costs during that time, because that's going to keep marching on, especially with someone with very serious injuries. And then the intangible items of the emotional toll that all this is going to take on somebody. As with anything, fairness is the goal. We want to make sure that we're being comprehensive and evaluating all of the potential issues. And again, by doing that, by demonstrating that you're making a concerted effort to not ignore any of the factors that have an impact on the value of the claim, by doing that, you're demonstrating empathy that can kind of grease the wheels to a settlement. And again, that doesn't mean that you're trying to scam anybody into a lower value claim than they would normally accept. What it means is that you're really trying to understand it so that you can get to that agreed figure sooner than later to avoid litigation. Why do we want to avoid litigation? Well, because it's expensive. It's expensive because defense attorneys can be expensive, and I love you, all you defense attorneys out there. But, if we can save money on defense, that's a good place to do it. And the other issue is that juries can kind of be unpredictable. Both sides need to consider that, actually. Juries can come back with ridiculously high verdicts, but in some cases they can also make decisions that close the case without any payment. So both sides are at risk when a jury's involved. And I think both sides, it's in their best interest to try and avoid a jury trial whenever they can, depending on the case. So any discussion of the evaluation of damages for claims adjusters would not be complete if I did not mention the old method of the 3 times medical bill method of valuing a claim. Back in the day, back many years ago, it was often the idea that you would take the medical bills, multiply that by 3, and that would be your settlement amount. So in my example with the $500 medical bill, you would triple that, and $1,500 would be your number. And it might be. It could be $1,500. It might be less. It might be a lot more. The point is that the 3 times medical is not exactly the proper way to do it. And there's a lot of reasons for this. You can sometimes suffer an injury that requires only $500 in medical bills. Let's say you had an injury to your eye. It damaged the eye irreparably, but there wasn't a lot of treatment because they couldn't really treat it. And I may be way off with $500, but bear with me for this example. If you have a low dollar medical bill amount, but a severe injury like the loss of sight in your eye, the 3 times medical doesn't work. For someone who loses sight in one eye, that's a significant permanent injury that's going to have an effect on their entire life. And to say that it's only worth 3 times the medical bills is not only incorrect, but it is not accounting for all of the aspects of the claim evaluation that I've been talking about this entire time. The 3 times medical bill is old and outdated, and I would not recommend that it is utilized in any claim scenario. On the flip side, you may have other claims that involve very high medical bills, but very low overall value. And that could be, I would say, mostly in the cases where you have limited liability. Again, this isn't a discussion about liability today, but if you've got an injury that someone sustained that was largely their own fault, then the 3 times medical certainly doesn't work. As you handle more and more liability claims involving injuries, you are going to find that there is no one-size-fits-all approach to any of these. And in fact, I could pull it up in my file cabinet. I could pull up 30 different ankle injuries involving a slip and fall on ice. I can probably pull up more than that. And I guarantee you that the circumstances in every one of those claims is going to be completely different. The circumstances about how it happened, again, we're not going to talk liability today, but that varies widely. The age of the person, the physical condition of the person at the time of the incident, the healing process that took place. Some people get infections while they're in the hospitals. Others don't. Some people follow the doctor's orders. Some don't. The outcomes are always far different. So you can't say that this type of trimalleolar fracture is worth X amount of dollars every time, because that's not the case. They're all different. The 3 times medical bills approach does not apply to any of those scenarios. So don't use it. When we talk about evaluating damages, we need to consider factors that are going to increase the value of a claim and factors that will decrease the value of a claim. So we're going to talk about those now. Let's first talk about the factors that are going to increase claim value. First of all, we can talk about applicable law. Really what this involves is more than likely liability issues, which again, we're not talking about here, but the law can dictate whether or not someone is at fault for an incident. And if they're not at fault, then the value of that injury from a claim standpoint goes obviously way down, almost to zero if there's no liability. But if the law supports that there's negligence under certain circumstances, then that's going to push the value of that claim up. The next one is severity of the injury. The more severe the injury, the more severe the damages are going to be. The $500 medical bill versus the $500,000, 2 separate injuries. A fractured pinky versus a fractured femur, very different injuries. The more severe the injury, the higher the value of the claim. Jurisdiction and regional variations, I've already talked about, for claims that are venued in and around a city or a county that has a major city in it, those venues are generally going to be more expensive and more costly in terms of claim value than in more rural areas outside of the city. New York City is, probably the most expensive venue. Another thing that can increase the value, and I've mentioned this already, if it's an upstanding citizen or if it's a famous person or famous politician or somebody who has a lot of clout in the community, chances are those claims are going to be valued higher than if it's just the average Joe like me. This is an interesting one, and it's called the horror factor, and that sounds kind of gruesome, but some injuries are more gruesome than others. And if you've got that horror factor, be sure to remember that in your assessment of the injury. Was it a horrifying car crash where someone broke their pinky, or did they get it caught in the door on the way out of the office one day? 2 different scenarios, one far more traumatic than the other. So that's just, a goofy example, I guess, but consider the horror factor in evaluating your claims. The bottom line is you have to consider as many factors as you can. I just gave you 5 here, but there are a lot more. And a good adjuster looks out for those factors and makes sure that they include those factors in their evaluation. So let's talk now about factors that reduce the value of a bodily injury claim. So now we can look to favorable law in cases involving dog bites. Someone who's bit by a dog has to prove that there was knowledge of a vicious propensity. That's a law in New York, and if they can't prove that, then there's no claim. The claim goes to zero in that case. We have something called a storm in progress doctrine here in New York, meaning that if someone slips on ice and snow during an active storm, it's presumed that the property owner doesn't have a duty to go out there and try and mitigate snow and ice during the storm. And if somebody falls, there could be no claim there. The claimant's personal characteristics, again, they can have a negative effect on the value of the claim. If the claimant comes off as a jerk, or entitled, or somewhat rude, they may, or if they are like a known criminal, for example, the value of their claim could be considered as far less than someone who's, upstanding citizen and hero of the year. This goes to the claimant and witnesses, credibility and consistency. So when people are being asked questions, and if it is perceived that they're being dishonest in their answers, meaning that they're obviously lying or that they're being inconsistent in their story, a jury, for example, would not look favorably on them. So if you are getting statements from an injured party or witnesses that are in support of that injured party, and their stories just aren't adding up, chances are that claim isn't worth what everybody thinks at the outset it might be. Shared or contributory liability, again, not a liability discussion, but we always evaluate the injury as itself first, and then we apply liability. So if we evaluate an injury after considering all of the many, many factors we talked about today, and we come up with a value of, say, $100,000, but we think there's shared liability of 50-50, then we actually look at that value as $50,000 instead of $100,000. I'll bring up failure to mitigate damages. Again, that's another reason to reduce the value of a claim. If the claimant doesn't follow doctor's orders, doesn't mitigate their damages, or if they incur excessive expenses without being reasonable about it, these are all things that can reduce the value of the claim as well. Again, when we talk about factors that increase the value or factors that decrease the value, it's important to evaluate all of the factors that you can think of as an adjuster that's going to point you in the right direction and give you a sense of what the claim value actually is. So that about wraps things up. I hope this has been helpful in demonstrating all of the things you need to consider when you're looking at the evaluation of special and general damages in liability injury claims. It's a complex process. It's not for the faint of heart, but it is actually a very interesting career. And if you are considering a career as a claims adjuster handling injury claims, this is a good insight into what you have to consider almost on a daily basis, not just at the time that you are trying to figure out what the settlement will be. This doesn't happen the day before you write the release. This happens throughout the claim process from day one. You're looking at all these factors and you're putting them all together into a file that you can use then to ultimately evaluate the claim on its merits, all of the merits and all of the demerits for things that reduce the value of the claim. So again, I hope this was helpful. If you have any questions, go to my website, www.auten.claims, and just send me a message there. Where I'm on LinkedIn, TikTok. Go there and check it out. And also check out Chantel's website. Check her out on LinkedIn as well. Chantel Roberts, CMR Consulting. And that's about it. Well, you have a great day, and we'll see you the next time. Bye-bye.